Alrighty, hello everybody, and welcome to Freelancer Taxes 101. Can everybody hear me? And our agenda basically is just three things. We've got 45 minutes, and we're going to cover the basics of what you need to know. We're going to cover the common tax terms that you keep hearing. We're going to cover what exactly it means to be a freelancer, what counts and what doesn't. And hopefully this, we'll go quickly through this information. If you already know it, it should be a good refresher. If you don't, then hopefully it will, it will still be informative because we'll get a nice refresh for you. Now, the second thing we're going to cover is the top 5 mistakes that we have seen freelancers making when it comes to taxes. At Keeper Tax, we've helped over 50,000 freelancers with taxes, and so we've been around the block a few times, and we've seen, frankly, a lot of mistakes being made. So we hope that this will help reduce the chance that you'll make one of them, and hopefully also start a lively discussion. At the end of the webinar, we will leave 15 minutes for Q&A, which is just open to anyone who has a question. You should see a little chat box in the lower right-hand corner of your screen where you can ask a question. If you do ask a question, we will either Justin or myself will answer you right in the chat, or we will actually publish that for the whole group to see, and we'll discuss it together. Excellent. All right. But before we get into it, there is a small disclaimer here, which is essentially that while at Keeper Tax we care a lot about making taxes easy to understand and simple, the reality is taxes are really complicated, and for a lot of for a small number of freelancers, like there's going to be certain edge cases and conditions under which some of these things that we try to provide generalizations for do not apply. And so if you think that certain components of this presentation don't apply to you, it is best to seek the advice of a tax professional. But with that said, this advice should apply to the majority of people. Excellent. All right, let's get into it. So first question that we get a lot is, this word freelancer that we use when we say freelancer taxes. A lot of people don't refer to themselves as a freelancer and are wondering if that's, essentially this tax stuff applies to them. And so basically all these bullet points are synonyms for freelancer. Like if you call yourself a 1099 contractor or an independent contractor, if you are self-employed, entrepreneurs, solopreneurs, business owners, tax law for all these folks is very similar. And, business owners being single member sort of LLCs. And so there's a lot of us that fall into this bucket, about 57 million people in the United States. So essentially when we say freelancer, this is who we're referring to. All righty. Now, in the next section, I'd like to just cover some of the basic terms that get thrown around a lot for taxes when it comes to freelancers, that I just want to make sure we're all on the same page. Now, I will leave some time at the end of this slide for questions. So if you want to ask a clarifying question, go ahead. But we'll get started with essentially common tax forms that you receive as a freelancer. So they're called 1099K or 1099-MISC. Those are the most common ones. And essentially what these are is the platform that hired you is sending you information about how much they paid you over the course of the year. Now, if you receive one of these forms, you should use it when you file your taxes. However, if you did not receive one of these forms, but you did work and earn money as a freelancer, that's okay. All you'll need to do is just do the math yourself and essentially report to the IRS how much you earned on your taxes. And that's just as good as putting the numbers in from a 1099 form. Excellent. So second term that you should know is Schedule C. A Schedule C is essentially a form on your taxes that you have to fill out as a freelancer. Hopefully you don't have to deal with the Schedule C itself when you use a software or an accountant that can help you. But all a Schedule C is it tells the government how much you earned and how much you spend to earn that money as a freelancer. Third term, which hopefully most of you are familiar with, is just tax deductible expense. It's also called a tax deduction or a tax write-off. A tax deductible expense is something you bought that was bought in order to help you with your freelancing work. And because of that, you get to report it to the government and save money on your tax bill, because essentially the government only taxes you on your income, so your net income. So if you earned $1,000 but had to spend $200 to earn that, you only pay taxes on $800, the difference. So tax deductible expenses are very important, and we'll cover that in more detail later on. Alrighty. Fourth term here, that's good to know, is tax withholding. So as a resident of the United States, your income is subject to taxes by the government. And tax withholding is the process of essentially, rather than paying all at once at the end of the year, you would not receive part of your paycheck, and it would automatically be diverted to the government. And this is a very common practice for W-2 salaried paychecks, but it's much less common for independent contracting and freelancing. And the last term relates to that idea. Quarterly taxes, also called estimated taxes, are the freelancer's substitute for automatic tax withholding. Essentially, all it means is that you will be, rather than pay your entire tax bill once in April at the end of the year, you will pay a smaller amount of taxes 4 times a year, so that essentially it's not as big of a shock at the end of the year for you. So quarterly taxes are important, and we will cover them as one of the top 5 mistakes that freelancers make. Excellent. So I'll take a short pause here in case anyone has questions. Feel free to drop them in the chat. I don't see anything now, but if someone has a question about these terms, I'm happy to answer it. All right, I'm going to move on, and then, oh, here we go. So Brandon asked a question. What's the difference between a 1099 MISC and a 1099K? Yeah, so that's a good question, Brandon. So effectively, they are both reporting the income that you earn as a, excuse me, I'm just going to publish this question. Okay, so Brandon asks, what's the difference between a 1099 MISC and a 1099K? So they are forms that report different types of income. So a 1099K is essentially a payment processing form, and a 1099 MISC is other types of miscellaneous 1099 income. And in either case, they're treated very similarly, and they both report the freelancing income that you earned from that platform. Alrighty, it sounds like some folks are having issues hearing me. Are other people able to hear? Okay. All right. Yeah, we'll take a look to see if anyone else is having audio issues, but we'll go ahead and continue for the time being. Thank you for replying, everyone. All right, so we've covered the basics, and hopefully these are terms that you have heard before. Now, this next section, I want to cover the top 5 mistakes that essentially we see freelancers make, and that I really want to make sure that all of you aren't at risk of also making. The first and a very important mistake to avoid is assuming that you will get a tax refund. Now, the reality is, for freelancers, most of us don't have automatic tax withholding. So unlike a W-2 salary job where taxes were withheld all year and you might actually be getting a refund because you overpaid on taxes, for most of freelancers, that's not the case. And and I hesitate to put an actual number out there, but you will be taxed about 20 to 40% of your reported freelancing income. Of course, it could be lower if you, depending on your tax bracket, or higher, but that can be a fairly significant amount of money. And so it's important to sort of know that and prepare for it, and do everything you can to, not overpay needlessly. And if you want to sort of get a sense, without actually filing your taxes, if you want to get a sense for how much you would owe, we have a free tool for you at keepyourtax.com/tax bill calculator that you should feel free to try out. Excellent. So that's mistake number 1 to avoid. Mistake number 2 to avoid is essentially forgetting to claim tax write-offs. And what we see happen a lot is people convince themselves that tax write-offs don't sort of pertain to them. And a lot of that is actually stems from confusion about the difference between personal itemized deductions and business or freelancing itemized deductions. And so people think that if they earned less than a few $1,000s as a freelancer, then tax write-offs don't matter because maybe the standard deduction will cover it. Fortunately, that's not the case. What the reality is that any tax write-off that you can claim is going to save you money on taxes. Even if you earned, even the majority of your money from a W-2 salary job, it doesn't matter. Any tax write-off that you can claim against your freelancing is going to earn you money, it's going to lower your tax bill. And the third thing that we see is people think that, tax write-offs are great, but they're for business people, and I don't have them myself. And this, I can't stress this enough. It's very unlikely that you don't have any tax write-offs. Whether it's something as simple as a portion of your phone bill, or gas bills or transportation expenses, it's very likely that there are tax savings out there that you should be eligible for. And that's part of the reason we built Keeper Tax, is because we think that everyone deserves to know that and to have access to that easily. And last thing here is, if you want help with finding those tax write-offs, obviously that's what Keeper Tax does. And you're welcome to also use our free resources at keepyourtax.com/free resources. All right. Number 3, thinking that you must have paper receipts in order to claim a tax write-off. This one is incredibly common. And it comes from sort of fear-mongering of certain very cautious CPAs. And the reality is that, the IRS, we're in 2020, and the IRS has deemed digital records as sufficient proof of purchase in most cases. And so that means, card and bank statements, email receipts, even calendar notes or other things that you might have, those are all proof of purchase in the same way that, 20 years ago, just a paper receipt would have been. And so, there are a few exceptions, such as cash payments. If you buy something with cash, you should have a receipt, or, split purchases, where you buy something that, part of it is for freelancing and part of it is not. It's great to have an itemized receipt in that case. But for the most part, if you don't have a receipt for something, that doesn't mean that you cannot claim it on your taxes. A lot of things these days don't even print paper receipts. So the IRS is basically up with the times, and you certainly shouldn't stop yourself from getting the tax write-offs you deserve. Number 4, and this is a very important one. Essentially, if you owe more than $1,000 at the end of the year, and that comes from, if most of your money came from freelancing, then the government does expect you to pay quarterly taxes or estimated tax payments 4 times a year. You are expected to pay 4 times a year and not wait until the end of the year. Now, this is quite laborious, and of course, Keeper Tax does help you do this so that it becomes a little easier. But the reality is, if you choose not to do this, there is a penalty, and excuse me, and the penalty it's not insignificant. It's, of course, it depends on how much you underpaid, and it depends on the interest rates, but it'll be hundreds of dollars and up. So that's something to be aware of, and if you do want to make a quarterly tax payment, it's great to start essentially now. The first one is due in April, essentially at the same time that you file your 2019 taxes. The first quarterly tax payment for 2020 is due. All right, and last but not least is the mistake of filing taxes late. Now, if you get a refund, filing taxes late is okay. You actually don't get penalized, essentially, because you owe money to the government anyway. There are exceptions to that, but the problem with owing money and not filing is that there are significant penalties that rack up over time. Every day they increase, and if you essentially owe money but cannot pay that, it is still better to file but not pay, because the penalty gets reduced substantially, and the IRS has very good payment plans, pretty much better than any loan provider would, with very low interest rates that help you pay back the amount of money you owe over time. And so if you're caught in this unfortunate position of getting caught off guard with your tax bill, we heavily recommend filing your taxes anyway and squaring up with the IRS later. Alrighty, that concludes essentially our overview of everything freelancers should know. In sort of the last 20 minutes or so, I'd like to open up any questions or comments that people have. Justin and I will review and reply to them. And and we're more than happy to help. All right, so I'm going to go ahead and transition to this question screen here.